Hello, everyone. Welcome to Smart Investing. I'm Albert, the host of the channel, and today this video is going to be about the banking services sector. I do want to apologize for my lighting. My family's sleeping. Um, it's a crazy night today. Uh, Again, I'm on the East Coast in Florida, and there are a bunch of thunderstorms. We're in hurricane season. I just received notification that we are in the peak of a hurricane, um, window. So it's from mid-August to basically late October. So basically the next 2 months we're in that window for like dangerous levels or like peak levels of hurricanes throughout, the Atlantic coast. So, anyways, aside from that, um, the reason is that also if my lights go out, it's because of that. I do experience heavy rains like this, and then there are times where my lights shut off for a few minutes and then they come back on. I just don't want to risk my lights cutting off and my screen cutting off, so that's why I have it like this. I know I look kind of two-faced right now. I have half light and half dark, but um, just bear with me, and I hope you guys still enjoyed the video. So anyhow, this video is going to be the 5 stocks on the banking services sector. So the 5 stocks that I have for you guys today is CFFN, MUFG, Nfbk, and Ezpw, and the last one is SWKH. So, first one up that I have is CFFN. Again, since this video is for the banking services sector, I'm going to be doing a fundamental analysis, which is number 1. Number 2, technical analysis, and I'll be doing a quant analysis. So the quant is basically an overall view as to what kind of strategy, as to what kind of, you know, um, guideline to see what kind of approach you want to take to the certain stock at the moment, or what kind of approach you want to take as to, short term or long term. Just pretty much what this stock is good for. Could it be good for short term or long term? Could it be good for income or growth, or a little bit of both? We that's what the quant rating is. It it tries to narrow down what the stock is actually good for. That's pretty much what it is. So let's begin. So today is August 28th, Sunday. It is 10:19 p.m. And we are doing the 5 stocks. So we're going to start with the first page, and that's what I have here. So we have here CFFN. So we have that at $9.41. And then we have the next one. Let me move my screen a little bit. Hold on. Let me move my screen right up to I think I'll move my screen a little bit like right there. It's not too much in the way, but you guys can see better. So we have $9.41. So I don't really mention this, but I think it's self-explanatory. But I'm gonna point it out anyway. So this company has 128 million shares for retail investors, and basically the leftover shares for the company. This is the total shares, but the difference between that is um, the difference in shares. Those are the shares that the company directors and the CEOs, those are the shares that they bought beforehand. So basically, whatever's left over, we as retail investors and everybody else gets these amount of shares. So anyhow, market cap at 1.3 billion. I can respect that. 52-week high and low. Um, I do not like that. Earnings per share, as long as they're positive, and usually I'm pretty generous, and depending on the stock overall, um, I see it for what it is. Uh, there's some there's some how can I say? There's some data that I see that can be more important than others. So if I was to rank like this data versus this one, um, I mean it's hard to explain, but um, everything is important. Everything is important, but you do just want to see overall good stock, and that's what I tend to do. Again, positive earnings are good, but this to me is extremely important. Um, Market cap, sometimes. The reason I say sometimes is because you might see small companies with minimum, and I'm saying minimum, at least a $1 billion company, and they might be decent companies. Um, yeah, they might be growth stocks, and they still might even pay a dividend. But uh, since a company's value and their market cap is so low, they still have might they still might have room to grow. I'm getting tongue twisted. Sorry about that. So again, every data point is important to me. Some more than others, but again, overall, everything is taken into account, and that's why I do these evaluations. So I got a 15.3 PE. That's pretty fair. Again, I've heard somewhere that PE is not the best uh, data point to use for pricing when it comes to the banking sector. I use it anyway because I'm still not an expert for taking uh, value into account for using other metrics such as price to book and price to sale. Um, Again, I really want to read up on it more and see a bunch of websites and different uh, newsletters and all that, and just to get as much information as I can. So again, I have not mastered these metrics. I just know basic, I just know basic. But again, when it comes to mastery, I'm just not at that level when it comes to these metrics. But again, I am a master. Uh, I'm a master technician also, and a master investor, if you want to call it that. When it comes to taking all the info into account. So again, everything is just a summary, short and sweet. So volume, we have at the top right corner. That's used for technicals. That's fair. That's a fair amount of volume. Um, I'm not looking for a specific number to say, oh, I want it to be this number. I just take it for what it is. If I like it, I like what I see, then I go for it. If not, then so be it. So we have here the again, I'm not liking the 52-week high and low, but the numbers so far seem to be okay. So, oh, and then I also forgot to mention this metric when using uh, price points and data to find out the value of a certain stock, the book value, um, and price book. Uh, if it's over one, it's considered overvalued. If it's exactly one, it's fair, and if it's under one, I believe it's um, undervalued, like slightly undervalued. So um, I don't, I don't know what metric that is used for. I don't know what they use it for. But again, it's just like I just don't think it's accurate, to be honest. Because I mean, to say over just one number, like really, just to value a stock based on one number, if it's above one or below one, I mean that's just not accurate. Um, I mean, I'm sure the numbers all come together and they fit out with the formula or whatever it is that is done to find what this exact number comes to be. But I just don't like it because of the simplicity for it. And again, other metrics are simple, but what I'm saying is this is not an accurate, for me, in my perspective, it's not a detailed measure to be suitable to say, okay, um, this is exactly, you know, undervalued by a little bit or by a lot, or it's just not an accurate measure. It's just too basic for me. So that's what I'm trying to get at. So let's look at the chart here. Now we're looking at technicals. So to me, it looks just pretty flat. It looks pretty flat. If I was to draw a line right in the middle here, it just looks pretty even. It doesn't look like you made money. Everything's up, down, up, down, up, down, and then you see my lines here, my moving averages. You see them there, and they're just slightly wavy, but again, it's just breaking even. I don't like this for a watch list so far. I don't like stocks that break even. I like stocks that either go up, whether they track the S&P 500 or some kind of uh, benchmark. They want to compare it to some kind of competition or their peers or somebody or something. So, uh, yeah, that's all I gotta say for this stock. So again, they have decent numbers, but we're gonna go over some more numbers. So what I have for the feed. So I don't know if this is accurate or not. So the earnings call for the third quarter, it looks like it's going to be in October, of late October. See there. So that would be basically that very last week in October. The last four earnings that have been reported, they look like they have beat earnings right there. So that's a really good sign. A really, really good sign, especially at a time like this when we're in a downtrend. Again, you trade with the market, not what you want from the market. And again, you take what the market gives you. I'm going to repeat it again, and I've said this in my previous videos. I encourage you to be bearish because we are in a bear market. We don't know how ugly this is going to get. These are huge opportunities. These are, wonderful times to be an investor as of even the last 2 years. I know 2021 was a crazy year. 2020 was okay. I mean, not for me. I'm speaking in general for when people have invested, and then I've been holding out. I've just been pretty much hibernating, I guess, like a bear. But still, I've said it before. I encourage you to be bearish because there's no point in encouraging higher prices, and you're paying for higher prices already. Um, outside from the stock market, if you want life to keep getting expensive every year, then to each their own. Um, but in the real world, in reality, when you step outside, there's a lot of confusion and frustration, and the majority of people just feel like that. It's not fair that the little guy, working class people, um, just regular Joes, working, and then we're the ones that wind up, with paying the inflation, and then the rich just keep getting richer and laying back and just paying attention to their portfolios, and they I know they can take a hit, but it's just to the point where the greed is just it's unnecessary. The greed is just unnecessary. So anyhow, enough of that. um I like to just throw in my perspective while I'm reviewing stocks as to what is going on in the world. I know a lot of people don't listen, but I think it's important anyway. So anyhow, we're gonna look at. Uh, so this company is called Capital Federal Financial. Uh, we're gonna look at the dividend history. Wow, I have never seen a company in the banking sector, especially in the banks sector, where they pay a special dividend. Um, is this really a bank? Because I've never seen. So they are a bank. I've never seen a bank pay special dividends. So actually, this coming weekend is my weekend to do the special dividend paying companies. So again, this was just a coincidence where this special dividend stock landed in my lap. Um, Again, I'm just seeing this for the first time. I don't look at or review or have a speech, or I don't read off of cards or anything. This is all live. So this is all real time as I'm doing this video. So anyhow, we have a special dividend payment if we look at right here, this was in 2019, and then another one in 2019, then another one in 2020. I want to look at the 2020 numbers because 2020 was a big down year. Even though it was for a few months, but still, there are many companies that did make a cut for dividends, and I want to see how this company reacted within the last 2 years. So, starting at 2020, it looks like they made 5 total payments, which is good. So now we're gonna look at the special dividend. So they paid a special dividend in 2020. They paid one in 2021 and 2021. Again, they still haven't paid one in 2022 as of yet. I know the year is still not over, but again, it doesn't look like they have paid a special dividend as of yet. Now, if we compare the dates within the last 3 special dividend paying companies, uh, these two are in November, and these two, the single one was in June. And let's go back a little further real quick. So again, 2019 was in November, and then another one in June. So June already passed, and it looks like the only chance that we have for it to get a special dividend is in November, if anything. So, with that said, the special dividend payment, so it went from 13 to 40 cents, and it went back down to 22 cents. So these are random payments, but again, consistent payments. That's still good enough, even for the banking sector. So when you look at the total payments for 2021, this was about 6 payments. So that actually totaled up to, let's see, so let's do the math. So 40, 62, so 70 cents, 78, so 86, and then let's see, 94. So 94 cents on the year. Now we're looking at, again, like I said, no special dividend payment for the year as of yet, but who knows if they might pay one. Maybe they will, maybe they don't. So now we're going to look at financials real quick, and then we're going to look at some quant ratings. Hopefully they still have the quant ratings. Analysis, let's look at that real quick. So we do have the quant ratings here. So overall, the highest quant rating we have is for growth. So it's telling me uh, it's preferred for this stock to grow in price instead of used as income. That's what it's telling me, but I want to see if I agree with that. So let's see what we have for their numbers. Now we have their earnings have been beat. Annual numbers. So we have ROA, ROE. I wish I had those net margins. It will help. That is very, very, very important to look at. Always. So book value is, I mean, that's not a metric I use. So we have cash flow per, got a fly in here somewhere. So cash reserves we have at 8.5. These numbers all look the same. These numbers all look the same for the past 5 years. That didn't change much. So cash reserves are about the same. I could go back further years and all that. Could look at that, but I'm not going to. So I'll just leave it at that. I wish I could move this box at the bottom, but it's not letting me. So anyways, we have here net income. Let's see if they give me revenue. Still having trouble with finding correct numbers for their net income and their revenue. Sorry, their revenue and operating income. So debt is at 87%, and that's from 2021. But we're gonna look at quarterly estimates. And again, in Q3, well, Q1 it was at 87, and Q2 was still 87, but now in Q3 it reached all the way to 88%. As good of a stock this may be, if it is, again, because I haven't seen the revenue and all those other data points. So let me see here. I just don't like companies with high debt. They might be better than their peers. So again, it looks like they can cover the dividend. But remember, this is a company that has very high debt. So I'm iffy about this one. It's hard for me to lean to the fence to say yes or no. I'm sort of in the middle. I'm pretty much neutral about it. Pretty much neutral about it. So when I'm usually neutral, what I usually do is to be on the safe side. I'm just gonna say no. Um, it seemed like a decent stock, but those debt numbers, I just don't like them. And on top of the fact that I it's not their fault, but I just don't have the numbers for their revenue or operating income. So I'm gonna say no to CFFN. They seemed okay, but again, they need work. They need work. Next one up, MUFG. So now we're gonna pick up the pace here. $65 billion company, 52-week high and low. So pretty much a $2 difference from the past 2 years. Yeah, that's horrible. There's no growth in that. And again, also in the last stock with the CFFN, the quant rating was received as growth, and I don't see growth in that company, to be honest. Only I saw dividend growth, um, slightly, and that was because of the additional payment from the special dividends. But other than that, I just don't see it. I just don't see it as a good stock, um, for the majority. So again, they might, 65 billion. This is not a new company or a small company. Uh, that's a respected number, very very respected. Um, with that market cap in Wall Street, I could just imagine. So we have a PE of about 10. So I like that number. Very undervalued. Uh, their earnings, I'm not sure if it can cover the. I mean, it can cover the dividend from what I'm seeing, but those numbers are so low and so close together that it might be unsustainable. And again, this is just, I don't see no growth in a company with a share price that low. So we have the 5 year. It looks pretty flat. This is not a company that um you know it's not a company that looks like they are growing. It's hard for me to say what this stock can best be used for. So we're gonna look at the analysis real quick. So quant rating, highest one that I have is momentum at 9.3. We're gonna look at that. So they do have momentum. I will give them that. Very cheap stock. 1 million of volume, and let's see if they have had any price changes within, let's say, the past 3 months. Again, these are not big moves. I don't know why people are uh, into this stock when it doesn't seem like much, to be honest. It don't seem I don't see the value there. I don't know why people like it and why it's so active, to be honest. Um, Maybe there's something I haven't read yet or something that I don't know that other people might know. So earnings have been dropping the first 3 quarters. That's what I see. So we have dividends per share. Do they have rising dividends? Any splits? No splits. And dividends are twice a year, if that's what I'm seeing correctly. Now for the payment, it's only 11 cents in 2021. So 2 payments of 11 cents. So that's 22 cents. That's too slow for my taste, semi-annual. And then being flat for that long within these 2 years, I mean, it's horrible. That's just too slow pace for me. I like something with a little bit more interest for the shareholder or stakeholder. So MUFG, I'm going to say no, and the reason being is because it's just not worth it overall. It's just not worth it. So this company is actually the Mitsubishi Financial Group. So again, we're gonna look at the financials before we go, and we're gonna see here their debt. Um, Waiting for this to load. So if it doesn't, it doesn't. So revenue, operating income, still not working on a different sector. So I guess it's still not working on the platform of Webull, but I'll look that up hopefully, or hopefully I can come back to this stock and say what I want to say when I see those numbers for the revenue and all those other numbers. I wish I could incorporate into this video. Uh, 95 debt, 95% debt. This is definitely a red flag. That is way too high. I don't care who you are. I don't care who you know. I don't care how much cash flow you have. You could triple your cash flow or have triple cash flow above the liabilities, but it's just not worth it. So this is close to 100% debt. Um, this company, I wouldn't. I'm not gonna jinx it. I'm not gonna say they're gonna go out of business, but this company is gonna struggle. This company's gonna struggle. So next one up, Nfbk, Northfield Bancorp. So we have 52-week high and low. Pretty decent. Market cap was 727 million. PE is at 11, so that's slightly undervalued. Free float of shares that are available to everyone is about 38 million. Now, earnings per share are positive. They're positive at a 1.3, and dividends are at a 0.52. So solid info, and that dividend can also be covered by their earnings, whether they like it or not. So now we're gonna look at the 5 chart. Look pretty easy. Looks like a roller coaster ride from my end, and yeah, it's still raining. So the 5 year, look at that 1 year. So for the 5 year, it's gone up a lot, and then now craziness begins. So now we're gonna look at the analysis. It's just nonsense. So the value we have is at 666, and then if I was to choose a secondary, so again, the highest rating for the quants is value. So it's telling me that it's a really, really good price compared to, reinvesting in the dividend stocks, because the dividend stocks so far so good. And for today, it's at 52 cents. So you're looking at about 15, 30, 60. No, so yeah, there. I'm not gonna pop that balloon. So Nfbk, I said no to a watch list. Next one up, Ezpw. So we have, that chart was ugly. I saw it for like 2 seconds. That chart was ugly. So Ezpw, 52-week high and low. The difference of that is about $4. That's not a lot. $487 million company. Now, if we look at the bottom, 51 million. Then, if you want to look at something else as well, we have their earnings there, 0.54. So we have here consistent dividend paying companies, but again, this was all up until the year 2020, and I guess that was it. Uh, I just keep it in growth stocks. I wouldn't touch this company, look at it, nothing. It's just this company is not the company, but some of the people that are, reviewing these stocks might say it's good, but yeah, this company's trash. Ezpw. And let's see something real quick. No, I want to see this profile. Pawn loans in the U.S. and Latin America, non-recourse land. So they're not in the banking sector services, but the similar sector that they're in, they are in the consumer lending business. So we have here the last one but not least, SWKH. So I like that chart. Really looks nice. I hope you guys understand my charting process. Again, you want to see stocks that go up, 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 up. And that's for the most part. And you do that by tracking these charts. So 52-week high and low, not much of a difference. Market cap is 228. You're doing better than a few companies that I saw a few months ago. Seriously. So you're at $17.85 when it comes to this company. So now volume is really low at 8,002. See right up there. And that's a huge red flag for me. So I'm going to say no. Keep it on the safe side. When it comes to diamonds, I don't see any diamonds. Nothing's there. Last 5 years, it has gone up in 2022. So it went from 20, went down. Then it went flat. So the chart I like, the difference in amount, I just don't like that. That doesn't seem like a $4 move, especially on a 5-year chart. So this company is not what it seems to be. So financials, let me see how much debt he has. Wow, this is very, very, very low debt. So congratulations, 4.53% in debt. It's just so that was pretty much it. Income and revenue. Oh, they show revenue on this one. So, anyways, SWKH. Rival, no. So we have here annual. I'm gonna click on annual. Hopefully it goes through. So 2021, it looks like 2017 was a really good year, based on the income statement and the balance sheet as well. Really, really nice. Operating cash flow and that's pretty much it. Um, so again, this company, this stock, I'm gonna say no. I don't like it. But before we go, we're gonna see that they have not paid a dividend. I don't know what's holding it up for them, but the more you hold on, sometimes that train can leave without you. So this company is in the corporate financial services. Again, the volume is low, market cap 52-week high and low. So it just looks like this year was not their year. So that's all I have for you guys. And thank you guys for watching. And I will see you guys in the next one.